Hey everybody, Ace of Trades here. Was hoping to demonstrate a trade for you here, but this price action is just so ugly. Um, a lot of people would enter right here and maybe throw their stop down here. I'm not a big swing trader like that. I don't like risking a bunch of points. I'm not gonna here. Oh goodness, trying to get my fib tool to work. Okay, so if you entered there and you were trying to get a 1-to-1 or something out of it, you'd be basically targeting the measured move here. I was hoping to get something like a nice, clean, uh, bullish bar at the end of this two legs down here, but it just didn't happen. Just went into mush like it's been doing recently. Chances are this is going to now push up at least into this measured move. Because what we have here is I'll show you. Um, so overnight we had one leg up, two legs up, establishing an overnight high, and then we had one leg down, two legs down, and what I got here is this. I noted this as a gap to fill. So what am I talking about here? Um, Man, I got the shivers for some reason. It's just kind of chilly, very cold out. So yesterday on the chart, during the regular trading session, okay, this was basically our day here. One leg up, two legs up. And in the regular session, we traded up to this level, okay, during the regular session. So what happens then is overnight before the regular market opens, there's still in the futures market there's activity, and it still futures is open pretty much 24 hours a day except for the weekends and maybe like an hour or two overnight, um, where they're establishing like initial margin and stuff. So what this does like on the regular chart is it creates a gap in prices. So prices, let's see, where's 930? Actually, this came down. This actually came down and tested. It's funny. Okay, so we created a gap and filled the gap, um, pre-market actually. So what happened here, and you'll see this happen sometimes. It's a level to be aware of. Sometimes often, I should say, this doesn't always fill. It doesn't, number one, it doesn't always fill, but often it will. It's like prices want to close the gap that was left during the regular trading hours, from the previous day. So what happens here is, um, prices went way up here beyond where they closed during the regular session, and then they came back and you can see how they tested that level. So it wanted to come back, and this is called, traders refer to this as closing the gap. So there's a gap that's left. If we would look at uh, let's look at the daily chart. So on the daily chart, this was yesterday's bar. Okay, so what happened was, actually this is a good place to show it. So this was on the 16th, and then over the weekend, I guess, we created a gap. So we actually, on this bar here, or maybe this bar, we filled this gap. So you can see on the daily chart, prices closed here Friday on the 16th. And what happened is, on the regular daily session, they opened right here. Now during the day they traded within the wick, but they opened here. So um, very, very often, prices during regular session hours then will try to close this. Now it didn't close it here on this day. It didn't close it on the 20th or the 21st. It kind of closed it here. Well, it wicked into it. It finally closed it, uh, on the 26th. So that excuse me, that's kind of what I mean with talking about closing the gap. When that happens, it's it's a level on the chart you need to be aware of, because prices will try to fill that gap that's left, and sometimes you can use that as a, if you see, if you get momentum coming back towards the gap, you can use that as a target if you get an entry. Like if this was during the regular session, and maybe you would, this isn't the trade I would take, but maybe you would enter on this lower high, and you could use this gap down here as a target, as well as the measured move there. So anyway, we can see we did not hit the measured move here, and that's why I always find taking these like 1-to-1s and counting on the measured move is dangerous, because it doesn't always work. It doesn't always get to the measured move. Now, what happened is this uptrend made a two-legged break and created a new high. And so I was looking to try to get in on something down here, but I didn't get any good signals to take me back up. I just came down here and just went sideways into like a tiny little range before pushing up, and there's really nothing very clean to enter on to go down with it. So what am I looking for now? Not sure. I'm not sure what I'm looking for now. I'll just be watching prices. There's not really a bias here, I guess. If you were looking at the overnight session, technically 4 o'clock's down here, but because prices bounced here and it was in the gap, we could maybe now slide this up and use this as an area we need to be aware of, because prices already bounced out of here once. I don't see any like clear momentum in either direction, so I'll just kind of be watching and waiting to see if maybe the range forms, and then we can get a 2 legs off to either short off a high of the range or long off the bottom of the range, or maybe we start pushing down here, and we get another trend going. So right now it's just kind of sit and wait for me. And then one other thing I want to point out here is that I have a notation up here. This is something you want to be aware of when you're trading as well. Any high impact news items that could cause the market to go into high volatility and spaz, for lack of a better term, for a few minutes or maybe 15 minutes or whatever it might be. And usually before I come in the morning also, I'll just come over here to Forex. It's called Forex Factory, and with the calendar, and it's got all these high impact news items, and you can what I usually do is the ones that really just impact the US market are USD related, so I'll have that checked. And yellow, gray, these really don't move the needle at all. So I usually uncheck those. I'm not really paying attention. Today is federal funds rate. This is one of the very high impact ones that will, as the market moves towards 2 o'clock, it'll likely get very sluggish. And sometimes when within an hour, half hour, it's just untradeable. It's not worth trading. It's not worth getting stuck in. Even if you get a trade, it's not worth. Sometimes it's moving so slowly that it's not worth you entering a trade and not being able to hit your target, and then you go into this news and you just get this like massive spike in volume, and it looks like a EKG whenever somebody gets a shock, or it just spazzes like this, and it could whipsaw you and easily run your stops, and give you a great amount of slippage as well. So you don't want to be stuck in something like that. So I always watch these, and I'm just make sure that I'm not in a trade. Most of the time, You know, I'll stay out for like discounting the federal funds rate. I'll stay out for like, you know, unemployment claims is a big one too. That'll cause a temporary spike, usually only for like 15 seconds or something like that. Same with core PPI on Friday at 8:30. I'm usually not even at the desk this early, so it doesn't normally affect me, but um, sorry, I had an alarm there. Um, but I'll just have that on my radar and I'll mark it if there's something coming up. Sometimes there's things at like 10 o'clock. Um, so I'll throw that up on the chart just so I'm not so dialed in that I forget there's something going on and get stuck. So you want to be aware of that before you come in to trade. Just go over to Forex Factory and check all the news items, see if there's anything on the horizon for that day. This 2:30, that normally doesn't do anything. It's normally just the 2 p.m. there today. So yeah, so I will maybe be back again with another video if something else shows up or if I have something interesting to point out. So that's it for now. I'll see you again in the next one.